Good afternoon, Liliana. How are you today?
Good afternoon, Shawn. I'm doing really well. Thank you. How are you?
Oh, I'm fantastic. Lately, I've been saying I'm a lot better than I deserve to be. Uh, yeah, yeah.
I
What's that?
I used to say live in the dream, live in the dream.
Yeah, yeah. I've used that one too as well. Used it as well. I'm Shawn Williams, and welcome to Lending with Purpose. This conversation is all about empowering you with valuable information, resources, and engaging conversations with clients and friends that will help you navigate the world of lending, but not only lending to enhance your life. And so, before we got started, Liliana, you mentioned something. We were talking about sports, right? And um, I coined you as being a great golfer. And you're like, I didn't say I was a great golfer. And I was like, well, okay, I said you were a great golfer. Anybody that shoots the scores, at least that we talked about, like is an amazing golfer in my world, right? And so, but uh, one thing that you said about it beforehand when I said when we talked about how we used to kind of be athletes, right? But then we said we still try to stay active. And you mentioned physical and mental health. Uh, and so last week was my birthday, so I missed doing this last Thursday, right?
Happy birthday. Happy
Thank
belated
you,
birthday.
thank you. And so for this is the third year, for 3 years now, I've celebrated my birthday by doing a men's retreat. And so anywhere between 20 to 30 of us get together, and we focus on mental, physical health. And we also do some sort of a service project. And the one thing I noticed last year, so we did a golf outing, right? But we mixed in some panelists and speakers and such. And one thing I noticed is that the men were they were less excited about playing golf. So I'm the sort of the MC throughout the program, and you know, not talking a whole lot. I'm just kind of soaking it all in, and I'm trying to rush everybody. Hey, listen, we're at Top Golf. I don't want to take up all your day with these conversations, but let's just go play golf. And it's just it was crazy to me how much people wanted to talk more than they wanted to actually do the golf things and get an opportunity to kind of clear their heads, find out where everybody else is and with their mental space and things of that nature. And it's always pretty cool to have an environment where you can be open and kind of vulnerable and talk about some of the things that you're going through, but also that physical aspect of it helps the whole mental piece as well. And so you mentioned something about that earlier. I wanted to kind of open up with that, but with that said, tell us who you are, what you do. We'll get into our conversation. If you want to touch on the mental health and the physical health thing, you can too, but you don't have to. But just tell us who you are, what you do, and we'll get started.
Great. Well, thank you very much. I appreciate that. Again, happy belated birthday.
Thank you.
My name is Liliana Gonzalez. Yes, I am one of those people that hyphenated their last name. Yes. So I have been in mortgages just, a little over 8 years now. But my inception or kind of toe dipping into the mortgage world or into real estate happened actually when I was very young. My family comes from a family of immigrants, and they had a good friend that was a realtor who was a mentor of theirs and taught them how to buy, hold, and then rent, and then buy, hold, and flip. So when I was very young, I had to be a translator and learned all the ins and outs of mortgage and lending and how to do all of those things because I had to translate until my family became extremely versed in the differences between what the translation of different situations. So regardless, I've kind of been in mortgages or real estate my entire life, whether it be in explaining the differences or of lending terms, or also painting and tiling and doing construction and such when we had to flip. So that's a little bit about me before. And now I am working with Crescent Mortgage. We are based out of Georgia, but we're nationwide. and I'm the account executive for the Mid-Atlantic states. So I'm extremely excited to be able to be on here to explain a little bit about what we do and how we do it differently. Because the main reason why I do this is because I love helping people. I thoroughly enjoy hearing everybody's first home buying experience, and I'd really like to help everybody have the opportunity to do that easier, simpler, and with less stress.
Awesome. Thank you for that. Thank you for that.
Yeah,
That's just good to know. Your family got into flipping properties and such. That's a great way. I'm sure you saw so many different uh, uh, things and hurdles, I should say, that maybe you would have had to overcome and such. And but also some big wins for your family to build some wealth too as well.
exactly.
Yeah, no, that's awesome. So I don't profess to, and so the reason that I'm going to really enjoy this conversation because I'm going to be asking you questions really out of education because I don't profess to know everything about like home construction and like construction to perm. That's something that we're going to be talking about. Just
Hmm.
haven't really in my career had the opportunity to do too much of it. I think I've done just a handful of them.
Hmm.
And so this is going to be a really good conversation to get the nuts and bolts of it, but also maybe talk about how it could potentially benefit people nowadays. So those of you that are listening, we're going to be talking about unlocking home construction possibilities, but specifically, largely we're going to be talking about this construction to perm loan. So Liliana, can you tell us or explain the concept of construction to perm loans and how they differ from traditional mortgage finance?
Okay, so traditionally, construction programs are interest only and for only the construction period. So usually you have to refinance, so redocuments, do all the paperwork again when you do a refinance. And then you go into possibly a balloon, possibly an arm, or a 30-year term. Now, the difference between our financing and that is that you don't have to do all of those different steps. It's all combined into one. So you just do the paperwork once. You don't have to do several closings or two closings, and you know exactly where you're going to stand at the end. You know where you're going.
Got it. So how does it work though? Like so, why would I do a construction to perm loan? Like what would cause people to do something like that? Like you know what I'm saying? So I need to buy the dirt, get the land or whatever it might be, or maybe I'm buying from a builder. I'm not exactly sure how it would work, but like what are some situations in which like someone would be using a construction to perm loan?
Okay, so let's say your aunt or uncle has some property, or your parents have some property. They have 20 acres, and they'd like to go ahead and um, parcel it off, and they're going to give you, 5 acres of that property. Well, guess what? That is no longer going to be a purchase for you. That's going to be a refinance, and you're going to be able to use that possible end value of the end result of your construction as the value of your loan. Why does that help? Because it's easier for you to know exactly what the end possible payment is going to be. And it's also going to help you so that you could possibly come to the table without needing any down payment.
Got you. You can't leave us hanging like that. What do you mean come to the table without any down payment? How's that work?
Yeah. Yeah. So what it is basically it's technically a refinance. So let's say you're going and you're possibly trying to get uh, a construction um, loan from somebody, and they're telling you, oh well, you need this much down payments, etc. Well, in certain situations, you might need that. I'm not saying it's in every situation, but what you need to look at is several factors. If you can determine the step that is worth it. So if you're building and then what it costs and what it's worth. So if you our borrower and C is greater than B, which what it's worth is greater than what it is to cost, then it would be beneficial for you to use it as a refinance instead of a purchase situation.
Got it. So, go ahead. Go ahead.
So refinancing, you wouldn't need to have that 5% to come to the table. You would just need the money for the closing costs, which also can be possibly put into the loan.
Got it. So let's talk about a purchase situation.
Okay.
Let's just say I'm going to sell my house, right? I'm going to move to somewhere, wherever I want to end up moving to another state. I found some land, or I'm looking to buy some land and build a house. How does that work for me?
So if you're going and you're in a new situation where you're going to need you're not already owning the land. Although with our situation, with our program, you don't need seasoning. So even if you were to buy it and you had the deed in your hand for one day, you could still technically use it as a refinance. Okay. But let's look at the other version, the purchase version. You're still going to need 5% down. The cost of of the lot plus the cost of the construction would equal the total purchase price. You would need to also escrow setup is required at modification, and then plans and specs are needed. Of course, you're going to need an ERLA as well, so an application for the loan.
Yep. Got it. And so, all right, so then we get into like disbursements and such. So I got all that covered. I have my 5% down, ready to go. We get the escrows, we get the plans and specs going. Like, what kind of money am I kind of responsible for throughout the transaction? Like, so am I paying the contractors to do the work, like in draws and such, or like how's that piece work?
So you're going to be working with your loan officer, and the loan officer is going to be taking care of the draws. So the draws are going to be done through the loan officer and the builder. You're no longer a part of that unless you want to be. But my strong suggestion is for you to go ahead and hand it over to your loan officer, and the bank or the lending institution that handles the construction will go ahead and you do that for you.
Got it. So Skip Wilcox, you know Skip?
Yes, he's one of the account executives down in Georgia.
Got it. He said one-time close saves most borrowers between 30 to 40% in closing costs versus closing on two loans. And you talked about that earlier.
Exactly.
The benefit of the product like you have is like you do it all in one swoop.
Less stress, less cost for the borrower, and they don't have to worry about documentation over and over again.
Understood. And so, what are like the loan terms? And I think you mentioned is it interest only during the construction period?
Yes. Construction period is handled by the lender construction person or entity bank, and it's interest only.
Okay, got it. And then
it's modified into a 30-year.
And that's why you call it a one-time close, because you don't have to go back and do a whole new transaction again.
Yeah. Crescent goes ahead and we approve the construction and the modification all at once.
At the beginning?
At the beginning.
Okay, got it. And then so what's the benefit of like these terms and such? Like, is it?
Well, there are several benefits. Okay, so in the borrower's situation, they have less stress, less hassle. They do not have to do several closings. And let's say in the bank construction lender, their situation is that they have full control. They don't have a third party or a fourth party that could possibly be out of state having to approve the lender, having to do the draws or anything like that. They handle all that situation in-house. So they have that rapport with the builder. They're building that rapport with them. They're also building that rapport with the borrower, so they don't have another entity or another person confusing the borrower with many, many hands in the bowl, And not only that, but it helps with the builder as well, so they don't have to worry about using their own line of credit. They can
Gotcha.
go ahead, yeah, as soon as they get the draws in, they can go ahead and pay their subcontractors, which also alleviates a lot of stress on the builder, as well as making the subcontractors happy and making everything a lot more efficient and fast.
Understood. And then how how do you release the funds? Like, what determines when the funds are released? You know what I mean? So like I'm negotiating with a builder who's trying to come down to the final stages to determine who's going to build our house in a custom home or something like that, right? What conversation are we having around like when they're going to get their money to actually do the work, and then what under what circumstances will the draws be paid out to them?
So that is usually determined by the bank construction lender. They go ahead and determine whether or not at what phases they'd like to go ahead and do the draws. And usually it's about, 3 or 4 different draws, or sometimes 6, depending on, the first phase of, putting up the foundation, second phase, putting up the, piping, electricity. It just kind of depends on their, what their criteria is. But
Gotcha.
as our Crescent views it, we completely step back from that, and we give it over to the bank construction lender for them to determine, to work out with the builder as well as with the consumer, the borrower.
Understood. Understood. And then you mentioned criteria, like, so what kind of criteria and documentation are needed from like borrowers? Like, how do you qualify for this loan?
Basically, like you do for any other construction or any kind of loan,
And so in your case, because you're like a correspondent lender, is that right?
Yes.
Would the bank set the like credit score requirements and such, down payment requirements? Is that how it works?
Well, we do have a certain amount of requirements. We do ask for this program is for homeowners, so it has to be the actual person that's buying it is going to be living in it, right? So the other requirement we ask for is for it to be qualified, or be underwritten as a permanent program. So a certain amount of FICO score is needed, and and things like that.
Right. Are you able to discuss the range of like FICO score, just for those of us that are listening out here, like what the ranges are?
No, but you feel free to give me a call and we can discuss that one-on-one.
Okay. All right. Yeah. I just didn't know if there was a credit score like range
because it changes, so I don't want this video to go out and then it to be always out there and everybody assume that this is always going to be 100% accurate, because things change. This is what this market is. It's constantly fluctuating. So I'd rather them talk to me or call me, and we can discuss that over the phone or in person or through email.
No, that's fair. And then so I had someone text me the other day. I think they knew that we were doing this this conversation today, and they asked me. They said, "Is there such thing as a 5% down construction loan?" Because they're looking to move to North Carolina from Maryland.
Yeah.
And so I told them, I was like, I don't think so. Not that I know of, but I heard you mention earlier that there was a product out there for that. And so I'm going to hit them back and let them know that I think there is one out there for 5% down.
Definitely.
Got it. And then so builders, like, so I'm seeking out a builder to help me with this. Is there any sort of credentials or requirements that they need to have?
Oh, Skip came in with another comment. I can't read it. Sorry.
Oh no, I just posted it up here for everyone to see. It's just he's just basically the 12 months is interest only to start, and then it's going to roll over into a 30-year loan, into an ARM unless it's modified into a fixed rate. So what you said there. Yeah. And so tell us about the builders, like what credentials do they need to have?
Well, the builders are going to be vetted, and their credentials are going to be done by the banker construction lender. We step back from that completely. There's not much of information unless you Skip, I know you're listening. Is there anything that I'm possibly missing on that part?
Yeah, but what traditionally do you see, Liliana, in regards to requirements? Like they got to be licensed, bonded, insured. I'm assuming.
Yes, licensed, bonded, insured.
Got it, got it. Do
Yeah,
they have to have a certain track record or anything like that you know of?
that not that I know of, because
Okay,
I've seen
got.
the variety from several of the lenders that do the construction, is that they definitely have a relationship with that builder, and it just kind of varies.
Understood, understood. And then appraisal. Do we need an appraisal for this? And
Yes.
if so, how's that process, the appraisal process, typically work?
So the appraisal process is the bank construction lender goes ahead and chooses the appraiser that they would like to use, and that way that one appraiser is consistently on the loan. So you don't have another situation where somebody possibly comes in, after the construction part is done, and they appraise at a different uh, amount, and that's what we're trying to avoid. One appraiser through the whole process, from initial to even sometimes some of the appraisers, what they do is they go ahead and review the loan so that they can tell the construction lender when to do the draws. They work with the appraiser to do that. And then once the completion of the project is done, that same appraiser comes out and does the appraisal as well.
Gotcha. And how do they derive the value? So they start with an as is value, and then after repair value, or do they take into consideration all the plans and specs that have been done, and then give it a final value, and that's what the whole transaction is based off of?
Yes, that last part.
Okay. All
Yes.
right.
So
So
what
so
we do is they go from the specs and plans and everything, and they go from a CLTV, completion loan to value.
got it. And the land is included in that
Correct.
also.
Yes.
Okay, got it, got it, got it. And then are there any additional costs or fees that you know of that kind of differ, or
Yes.
folks should be
So,
understand looking forward to spending that's different from like a traditional loan?
well, in our situation, you don't have to worry about extra title costs or an extra appraisal fee. All of
Yeah,
that information is disclosed at the initial part of the initial part of the construction loan. So you don't have any extra incurred costs unless possibly you do some other kind of add-ons or something like that that you didn't initially disclose. And that is my other point on this thing as well, is that know what you want to do and double check with everybody involved to make sure you're all on the same page as to what you want to do for construction. Because doing changes later might cost you more money in the long run. And sometimes that might work out in your benefit, cost versus benefit. But I strongly suggest everybody get on the same page and know exactly what you want to have completed before before you
yeah,
start.
yeah. That's a good point, because I was going to ask that. Like, say for instance, I get into uh, you know, my project,
Hmm.
and something changes where I want to make a change, and I thought before I wanted a certain type of flooring, or I thought before I wanted certain type of cabinetry, and then all of that kind of stuff changes. What kind of happens through that process? Am I stuck like with my original plans, or when I adjust, are we able to pivot to incorporate that? And then like how's that part work, like financially for me?
Yeah, Shawn, that's a great question because that brings me back to what I was just talking about. The possibilities of making changes that are cosmetic are pretty much easy. And what you would like to do with your loan officer is just make sure that you're um, approved for a higher loan to value so that you can account for possible overages. But I still go back to my initial thing of know exactly what you want to do in the first place. So there are no um, extra expenditures that you shouldn't. But in the case of, things happen and maybe that flooring is no longer available and you have to change it, then you're already approved for that higher amount. So you don't have to worry about having to get approved again. So as long as you approve high, come in, a little bit lower, then you're going to be good. Yeah.
got it. I have a
But if
friend who,
let's say like somebody, for goodness sakes, decides to add extra rooms or another floor, talk to your loan officer first. Let them know that this is what you're thinking about doing, and find out with them whether or not the cost is worth the benefit. If your loan to value is going to increase, because sometimes people make changes that don't really increase their value. Does that make sense?
it does, it does. I had a friend who just built a really nice, massive custom home,
Yeah.
and he blew his budget out of the water. I mean, that he
Yeah.
had this designer, and they were like flying to different countries to find different like sort of uh, tile and things of that nature. And
Yeah,
at the
Calcutta
last minute,
marble from like Turkey or something like
I
that.
think they went to Italy or something like that. And then the other thing is he ended up installing a pool at the last minute, and so a lot of those changes weren't included in his original situation. And so there was a lot of it was come out of pocket, like
Yeah,
in addition to what he was already financing. And so
yeah,
he went through this, and so it was curious to me to understand that.
yeah,
Never say never. I don't know that I
yeah,
have any intentions today of doing a custom home, but I'm just curious about all this stuff because I talk to my clients about these things. We don't necessarily specialize in construction to perm, but it's I just kind of always curious as to how it works, and what the pitfalls are, so to speak. Not even pitfalls, but what to look for.
yeah, yeah. Because it's so true. Because I feel like a lot of people are scared of the possibility of doing their own construction because they think that it's going to be extravagant, it's going to be hard, it's going to be stressful. You know what? There's a lot of builders out there that make it very simple for you. They know exactly where you should fall in line with the types of fixtures you should have and the type of floor plan you should do, and they'll make it easy for you. Now, if you work with a really good loan officer or a really good bank construction lender, they'll also make it stress free. So I don't want anybody to ever come up out of this conversation thinking that it's harder to, because believe me, it's a lot less stressful than you think. And it's a lot more fun because you have the ability to choose your design. You have the ability to be flexible with possibly adding a whole, huge front porch to your house, which you have always wanted to do. This program also involves possibly doing a renovation of our already existing home. So you're able to add on possibly an in-law suite. A lot of housing is not available right now, and people are consolidating their whole family into one estate per se. And people are able to do that now. They're able to add the in-law suite or a kid's apartment or something like that.
Yeah, no, I'm glad you said that. That's um, we have a shortage, housing shortage and very low inventory, and so
Exactly.
this is a good way to combat that. So if you can afford it, and you can find an opportunity to do something like construction perm, that's a really good way to avoid or mitigate some of this competition that we see out here for purchasing homes. So thanks for that. So Liliana, we both have to go to a board meeting in just a little bit.
Yes.
So I won't hold you much any longer. I do have a few more questions for you. So number one, I'll try to wrap this all in one question.
Okay.
How can we help you? And you mentioned connecting with you earlier as well. So tell us how we can help you, and then what's the best way to connect.
Well, the best way to help me is to let other people know that this product does exist. Please let them know that it is easy and it will be less, stress on you overall. Please feel free to connect with me at lgonzalez at crescentmortgage.net, lgonzalezcrescentmortgage at gmail.com, or www.crescentmortgage.com, and you can find me there as well. I'm on LinkedIn, Liliana Cheverria Gonzalez. There is no question that is too small or too big, and I will, if I don't know the answer, I will definitely reach out to somebody that does. So please feel free to connect with me.
Got it. Thanks so much. It sounds like Skip's got your back too.
Yeah, he's a great avenue for a wealth of information. He's been doing this for a long time.
That's awesome. Thanks, Skip, for chiming in too as
Yeah,
well.
thank
And
you, Skip.
so, yeah, you ready for this question? Are you prepared for it?
Which one?
This last question.
Yes, go
All
ahead.
right. So, Liliana, you get
Yeah.
one person. You get to ask them one question. Who would it be, and what would you ask?
You know what? That's a great question. And I know that this has nothing to do with finance, but I would ask Barack Obama why he decided to go ahead and approve Obamacare. Because initially he wanted affordable care for all. And I don't think that that has been the actual result from Obamacare. So that's what I would ask him.
That would be the one question that you would ask.
Yeah.
Yeah, no, that's a great question. I don't. It doesn't have to be about lending.
Okay.
Yeah, it doesn't. It says enhance your life. So, love to hear that question too. I don't profess to know a whole bunch about how it's affected people and such. As a business owner, we try to, we're looking at the best opportunities to get insurance and such to our teammates.
Mm-hmm.
And so, I haven't seen that many options out there.
Exactly.
But that's a good question. That's a good
Yeah.
question. Thank you for that. Thank you for that. So everybody, listen, it'd be such a shame for me to have resources in the network like Liliana, especially about the conversation we had today with construction to perm, and not share that with the network. If there's anything that I can do to help anybody in any way whatsoever, please don't hesitate to reach out. Everyone, try to remain as safe and as healthy as you possibly can. And I'm pretty sure we're back here next week. For another episode. But thanks to all that are listening. Liliana, thank you for your time today. If you can just hang on for another quick question. Hang on after we finish, so that we can wrap up. But
Okay.
otherwise, that's it. Everybody have a great day. Liliana, thank you for your time.
Thank you, Shawn. I really appreciate your time that you gave me. Thank you very much for doing this.
That was easy. No worries.